Good afternoon, everybody. Yeah, here we are, session 46 of the Admiral Markets webinar series of Mastering the Four M's of Trading. My name is Paul Wallace. I'm a trader, analyst, coach, and your guide for this particular series. And as always, before we kick into the main ingredients for our session, we just have a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying videos for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients can still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK receive a compensation of account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. As always, ladies and gentlemen, Admiral Markets provide many good reasons for you to use them and trade with them as your brokerage. As you can see there, for two of their most popular instruments, both the DAX 30 and the Euro Dollar, they offer very competitive spreads during market hours, and they also offer both the MetaTrader 4 and MetaTrader 5 platform, but also with the Admiral Markets Supreme Edition plugin. Admiral Markets is also a global offering as a brokerage and is regulated and authorized in several entities across the globe. And if you speak to your account representative, they'll be happy to guide you towards the most suitable entity for your trading requirements. As always, ladies and gentlemen, from all of these sessions, you know, I've always taken it upon myself that the expectations for me is to help educate you traders about the 4 M's of trading, so you can go away and begin to analyze any market and be ready to trade it, and also to help you raise your self-awareness about managing risk and managing yourselves. For yourselves, ladies and gentlemen, we always have a broad range of experience in the room. We're always operating under time limitations, which means that we can't always go into the depth that people would like, but we always try and focus on elements that you can utilize tomorrow in your own trading. So, ladies and gentlemen, the Mastering the 4 M's of Trading series has all been about helping you learn, educate, understand, and master those 4 M's: markets, method, money, and myself. And as we've said throughout this series, is that good traders, those that are in charge of those 4 M's, okay? And if you're, that's when you tend to trade at your very best. But if you're having a challenge in your trading, it's normally being able to identify which one of those 4 M's is you're having the struggles in, so that you can start to narrow down what you need to do to solve any challenges you may have. So, you know, what we've got here, ladies and gentlemen, is that we're coming towards the end of the sort of Mastering the 4 M's of Trading webinar together. So today is July 8th, we're on session 46, and we've got 4 sessions left. This will be the last session that we're running through the GoToWebinar as we transition across to new technology that allows us to do more for our clients, and also as we prepare for our new Trading Spotlight series to begin in August of 2019. So what we're going to be looking at for these last 4 sessions is really just a quick recap of each of those 4 M's, so that you clearly understand them and are able to embed them into your own trading ideas. So today we're going to look at markets, and the next session we'll be looking at methods. Sort of session 4 around sort of July 22nd, we'll be looking at the money management, and I will finish off with a final session on myself, which will take us up to session 49. So hopefully by the end of that, you'll be very, very clearly happy with those 4 M's and know what to how to utilize them and look out for them in your own trading business. So, you know, as we just said there, you know, we've been talking about how can we draw our learning points out of this particular series? And we're looking that, we've been talking about over the last sort of month, we've been talking about, how do we prepare for our trading day, which is all about managing myself. How do we follow our 10 steps? Remember, we talked about process, discipline, and self-awareness. They are key for traders. And having those 10 steps helps us sort of manage ourselves. We talked about how we do our own market analysis, how we look at our particular entries, what particular kind of methods do we utilize in our trading, how we look to manage our risk on there, which is the money management side, and how we record and review our trades, okay, because you've heard me talk about that increasingly throughout the series, and exactly how important that is, okay, to record and review our trades. And so that all helps us manage our trading performance. So, that's what we've been doing over the last month, is just touching upon particular areas there, all of them sort of feeding into that kind of the 4 M's of trading, so that you can start to see how you can pull out these learning points and make yourself the best trader you possibly can be. So, what I talked about is, today we're going to look at markets, okay? We're going to have a, final recap of markets. So, we talked about how, you can go into this in great detail, and I know lots of traders and lots of analysts like to, but it's about realizing, being able to understand, the different type of markets or asset classes that you have available to you. So maybe, you're interested in trading equities, okay, or just share trading itself. Or perhaps you're more interested in trading the indices, okay? All of those equities make up the specific indices, global indices these days that traders utilize to give them access to a wide range of global assets. Or perhaps you're more of a commodities trader, okay? And we talked about, in terms of commodities, understanding the difference between hard and soft commodities, okay? Soft commodities being your agri commodities, so corn, wheat, etc., cocoa, as opposed to hard commodities being pretty much basically what we pull out of the ground. So that can be, gold, silver, copper, oil, etc. Some traders are, primarily focused on FX markets, the foreign exchange markets. Some would be looking at bonds, or what might be called fixed income markets, all right, that are, of importance to some particular traders. And not surprisingly, with in the last couple of years, there's also been that interest in trading cryptocurrencies, okay, and that has grown in popularity over the last year or two. But as I said, we're trying to keep this as simple as possible. We're always looking to sort of just try and keep it simple. And with regards to markets, regardless which any of those asset classes you choose to focus on, I need to know that you as a trader can literally look at any market and identify, is that market trending or is that market range bound? It is unbelievably important for you to be able to recognize what kind of market environment that particular instrument you're looking at. Now, of course, lots of traders, they start out by wanting to sort of, be able to trade trending markets, which is fine, which is absolutely no problem at all. But what we have to recognize is that, markets are normally only trending 20 to 30% of the time. So it's about being able to identify what market environment that particular instrument is in, okay? Because by, of course, understanding whether that market's trending or range bound, well, then we're in a position to identify what, which is the best of our methods to utilize on that particular market. That might sound, very, very simple. You might be saying that, well, yeah, of course, Paul, that's absolutely abundantly clear to me. But actually, you'd be surprised. You'd be surprised, ladies and gentlemen, how many traders, even experienced traders, lose track of that, okay? They lose sight of that because they think they've got themselves, a wonderful, fantastic trading method that will, will work well in all scenarios. But the reality is, if you're trading a range-bound method in a market that's trending, well, invariably, it doesn't matter how good that trading method is, you're still going to have challenges in the way that you actually trade those markets. So, it's important, desperately important, to know that you're actually, trading the right method for the right market environment. So as part of that, EK, we've talked about this, 4 or 5 sessions over the years about, when it comes to analyzing markets, so we can make a good decision. We've talked about in the past about the 4 horsemen of analysis, okay, namely technical, fundamental, sentiment, and geopolitical. And the reason being that it's about how do we make a decision, all right? Some people think technicals alone are fantastic. Some people will only utilize fundamentals or sentiment. Others like to take a sort of global macro geopolitical view on the markets themselves. It's very easy to get sort of caught up in it and bogged in it. And as I say all the time, that there's plenty of debate raging about which is the best form of analysis. But I've stressed this every session we've done on this. Okay, every session from effectively session 1 back a year ago. Okay, is that the reality is that it is nothing more than a decision-making framework, ladies and gentlemen. That is what we're looking for. A decision-making framework that allows us to make one of 3 very simple choices. Am I a buyer? Am I a seller? Or am I going to do nothing and sit on my hands? What you find is that very often new traders, new amateur traders, they struggle with sitting on their hands because they feel that they need to be constantly pulling the trigger on trades, and they don't realize the older adage that being flat is actually having a position in the market. Okay, there's nothing that says that you have to be pulling the trigger on 10, 20, 30, 40, 50 trades a day. Okay, it's about trying to have a simple, robust, objective, consistent way to make one of those 3 decisions. Am I going to be a buyer? Am I going to be a seller? Or am I going to sit on my hands? And very often, you will spend more time sitting on your hands than anything else. And by being able to help you create that, decision-making framework, that is what allows you to make those decisions, good decisions for your trading business. And that is what we've been focusing on, over our 10 steps, about just having simple, robust, objective, consistent way to make one of those 3 decisions, so we can work out, exactly what we need to do to sort of, do the best in our particular trading business. So, as I keep saying, I put this slide up a few times over the year, just because Paul Tudor Jones is a very well known and regarded trader, and also because I think this is a fantastic quote, namely that you may think you're in the business of trading, but in reality you're in the business of decision making. And the better you can make these decisions ahead of time, the better your results will be. It's a fantastic quote from Mr. Tudor Jones, and I appreciate that sometimes if you're a completely new trader, you might understand that on a very superficial level, but actually, what you'll find is that traders, the more you trade, you'll realize that quote there by Mr. Tudor Jones, a very, very successful trader. You can find more about him in the Market Wizards books yourself. Is that it's absolutely spot on. Okay, you are in the business of decision making, and so it's about you being able to identify the best way to make decisions. So, with that in mind, we're looking to make a decision. We're looking to sort of identify what we need to do. But what we can see is that what does a new trader have to focus on? What do they have to look at? Where can they go for all this information? And if anything, for new traders, they find it difficult because the internet's provided access to stunning amounts of new data and information. And then these new traders are now faced with an abundance of data feeds and media sources. You can just open up a browser and start asking and looking for internet data feeds or internet news, and you'll find that you are absolutely overwhelmed with different agencies looking to provide you with all of those data, all of those points. And so what happens is you find that traders become overwhelmed by the amount of information. All right, remember that kind of leads on to analysis paralysis. All right, so we just get so overwhelmed by data that actually make no decisions, and that's what we're trying to avoid. So it has to be about, well, what does a new trader need to focus on? How can a new trader be effective without becoming overwhelmed by all of the data? So, we've talked about this in terms of understanding, what your competition is, especially if you're a fundamental trader. Okay, if you're a fundamental trader of equities, you are up against, the sort of banks of people. Okay, I spend time in city going into onto trading floors like this, or floors full of analysts like this. So invariably, there are plenty of good analysts out there. Okay, as a private trader, is what we are determining ourselves as. It's about being able to make a good decision. Okay, I think that we can sort of maybe beat the banking analysts in their sort of breakdown of understanding the fundamentals of Vodafone. Is there's a little bit of delusion going on there. Okay, that's life just isn't like that. So it becomes about us trying to find an edge. Okay, trying to find our own edge, trying to find a way that we can operate and make those decisions and give ourselves the best chance of taking some good trades. So, of course, what we can do and what we have talked about over having our 10 steps is when it comes to markets, we just want to identify what kind of market environment are we in. So, we can take a moment to look at any chart, and that's what we'll do in a moment. We'll switch across the charts, and we just want to identify, is price going up? All right, is price actually moving up the chart? If then, well, then that chart is in an uptrend, okay, and we would be looking to be a buyer. We're not looking to try and be, Mr. Smarty Pants, okay? We're not trying to sort of defeat the will of the market. What we're trying to identify is if that market is very clearly going up, well, then we basically want to join that ride, okay? We want to find a way to be a buyer. That's what we're actually, that's what we're looking for. And we've talked about how we can define if a market is in an uptrend. Okay, we've talked about how you can identify it using your higher highs, okay, and higher lows. That once you're able to identify them, that gives you a very, very quick, clear, sort of insight into whether the bulls or bears are in control of that actual market. On the flip side, when you look at a chart, if price is just descending, if price is just going down, nudging its way down, well, then that chart is deemed to be in that moment in a downtrend. Okay, when markets are in downtrends, we look to be a seller. Okay, remember, we're trying to be a trend trader. We're not trying to sort of fight the trend. We're just trying to identify the trend, okay, and then find a way for us to just jump on board and ride it. That's actually all we're trying to do at this particular moment. So, and we can define downtrends, okay, define a series of lower highs and lower lows. Remember, we also talked about, where price was in relation to those moving averages. Price was above the 50 and the 200, then we were still deemed to be in an uptrend. Price was below the 50 and the 200, we were deemed to be in a downtrend. And if price is between, well, then, we can understand the price between the 50 and the 200, then we can sort of identify that market is a little bit messy, it's a little bit scruffy, and it's waiting to set up for its next opportunity. We're just basically trying to identify where are the higher highs, where are the higher lows, what's the actual trend in place at that time in whatever instrument class we're looking at. So, as always, this is why it just brings us back to sort of just reminding us of our simple 10 steps, all right, for traders to be able to follow. So that, when we open a chart, okay, look to sort of read the charts and understand what's going on with them. What we can do is always something simple a simple drill that we can follow that will help us sort of be the best trader we can be. And if you remember, what we're looking at there is the first one is, step one, define levels of support and resistance. Okay, we kind of fixated upon that right at the very beginning, a very kind of quick way to identify where levels of support and resistance are on a horizontal basis on charts. And how about, once that is there, once you can draw in those levels of support and resistance, it's about defining, is there a trend in place? Is that market trending up or is that market trending down? You can just see on that particular chart there that whilst there's been a few down periods, overall that sort of chart has actually been heading its way north for the last few years, really. Once we've drawn in our level of support resistance, well, then we'll wait and see how does price react at those levels. That's what we're really interested in, okay? Is price actually going to take a breather there, or is price going to be about to sort of be sort of assaulted by more predators? And it's about sort of trying to work out how the best way to help them without sort of overwhelming it. And it's the same with markets, okay? We're looking to see how does price react at those key levels, and once it does, well, then, that might provide us with an opportunity for our next trade. So that all links into sort of step 4 of looking for price action signals at those support resistance levels. And step 5 is trying to identify, is it actually part of a bigger chart pattern? Now, sometimes that might just be inadvertently, okay, but other times it's quite noticeable to be able to understand, okay, be able to see that your particular trade on something might be quite small, insignificant, but that it's a case of what you're looking at is part of a much bigger chart pattern that is going on, is being formed, and invariably that tends to attract more of the business from the sort of the super wealthy traders, the sort of very successful traders. So, as always, we step 6 was about risk. Okay, we always define our risk, accept it, and stick to it. That's what we'll be doing in a couple of weeks when we sort of focus on money management. Step 7 is rewards. Okay, targets are trailing. Remember, know your exit. Okay, when you're into a trade, know where you're out. Know where you're out for when you win. Know where you're out for when you're wrong. Okay, and it's the same with trading. Okay, it's we want to step 6 define our risk and accept it, stick with it. But then step 7 about understanding the reward side, and we need to work out whether targets are trailing are our preferred way to be a trader. Now, it goes without saying that I'm interested in making sure that all traders are able to record their trades. Okay, and that is equally important for yourself, ladies and gentlemen. That make sure you keep scrupulous records of your trades, so that you can review your performance. Okay, you can review how you did on the sort of technical elements, but also just review how well you did on the actual sort of being able to analyze, then identify the right trading spots to take a particular position. And then finally, as always, repeat. Okay, that's what we're looking for from you, is that consistency and discipline are key to traders. And as I say every week, it's very hard to be disciplined without being consistent. And it's very hard to be consistent without being disciplined. They are very natural bedfellows there, and I wish anybody who wants to sort of trade the very best that they can do, that actually being able to work with that in terms of just thinking about consistency and discipline, the key, that will actually help you sort of tick off that step 10 in terms of understanding the need for repeating. So if you remember last week that we just finished up just a couple of slides and we'll move across. Remember last week we talked about being the first of the month. We had a little look at monthly candles. We talked about how interesting that is, and hopefully you were able to take that away and utilize some of that data in your own trading. It's always worth having a look at what the it's offering the world at the moment. And that kind of monthly candle, I personally will quite happily sort of trade off that for various means. Okay, and it's actually quite simple, and and it works very well, and it's always worth having a little look at what's been going on in the monthly candles. And we also talked about, for new traders, just having a really desperately simple kind of, US dollar plan, and about how that can be fitted with the sort of older We can find that finished up with some of our older analysis about sort of just being able to focus on the dollar and being able to utilize elements of the good nature of the Admiral staff to help traders develop and become the best traders they can be. So we talked about just being able to sort of sit and Mr. Trump, you see him sitting chatting with what would have been the sort of Mr. Bush's family, and and he's very much able and happy to sort of engage with that family and engage with that as reporters and stuff are also very clear, and all of those things, they feed into the image that people have of the US dollar, rightly or wrongly. Okay, rightly or wrongly, they particularly feed in. And once again, just a little bit like what we've been speaking about, is that using those 10 steps to find out, is that US dollar bullish, bearish, consolidating, or is it just plain choppy? Because actually we don't want to trade through any of the consolidating or plain choppy periods. Okay, that's not really us. That's not really the way we look to work. It's about working out, if trending, then which are the best pairs to trade on. I've found most of this week on my own anecdotal trading is that it's about understanding which are the particular best pairs to trade and which ones are the cleanest with the most strongest trend. And it's very quick and very easy to identify them, okay, and actually to be able to sort of help build them. Then once again, that's sort of step 5. Okay, when do we get to see a confluence of events sort of take off to give us an idea that is not a false breakout, but actually the sort of the real deal, so to speak. Make sure that your entry trades are in line with the trend. It's just a very small piece, but just allows you to allows us to sort of take the best trades we can based upon that they are definitely in line with their business or their union as such. So, we talked about making sure that your trade's position sized and risk managed accordingly. We're going to talk more about that in a future session. Okay, that'll be one of the topics we'll talk on. We'll just put that we won't put that to bed here. Make sure that you record all of the trade details that actually, yes, you'll do. And a sort of strongly sort of very strict about that for traders. That I hope that's the best that they can actually do. As always, we just adjust from data and repeat. That's what we look to do. That's what we're actually trying to achieve, and that just is a very, very, very simple sort of dollar trading plan, which might come in useful as the phony war starts to warm up again. So, ladies and gentlemen, okay, before we just switch the charts for the last 5-10 minutes, okay, remember that mastering that 4 M's of trading is all about the big picture recap. It's about managing and mastering those 4 M's by knowing which ones they are: markets, method, money, and myself. Asking yourself the question, are they all in alignment? Okay, are they genuinely all in alignment? If not, then you shouldn't expect yourself outsized trading returns if you're if you're unable to sort of configure or understand where the people it's sort of not managing themselves well, where they actually how they look to sort of manage their own trades. You're looking to see, are they in alignment? Are you in alignment with your markets, your method, your money, and myself style of trading? And as I say, constantly monitor those 4 areas. Okay, the more you're able to watch and adapt to them, the better you will be in terms of managing and then going on to master those 4 M's of trading. So as always, if you're watching this session on demand, there is the London number you can call there, which is +44 0203 5140756. Or you can drop us an email at hello@admiralmarkets.com, or you can connect to us through social media on youtube.com/admiralmarkets, or on Facebook, facebook.com/admiralmarkets global. So there you go, ladies and gentlemen. I hope you found that a little bit useful and got to see a little bit more of the understanding of what the features will like on that particular time, in terms of looking at how markets consistently look to sort of how would I describe it? They consistently repeat themselves, and it is about basically being able to identify those patterns within the right market environment, and that is what gives us some fantastic opportunities for some great trades. So what we're going to do is we're just going to switch across to the Admiral Markets MetaTrader 4 platform. If you bear with us a moment, we'll just have a look at what is there available for us, and we can take that forward in terms of looking at charts and with whatever else is going on in the jungle today. Okay, so as always, we're just looking at our charts here. Now, if you remember, we talked about the different types of instruments, and we also talked a session a couple of months ago now about ensuring that we set up the right profiles for the right different asset classes to make things just a little bit easier for us. You can probably see that under my profiles. Okay, I have a profile for commodities there. I have a profile for cryptos, okay, and then I also have one for equities, and also one that is fluid in terms of it's for each of the major FX pairs, because I know that actually gives me an absolute bonus worth of information that's useful. But truth be known, that as we've said before, is that with particular trades and markets in America, it's important for us to understand what that dollar index is doing, because that has a huge impact across the whole global in terms of prices for particular elements that make things a good deal more expensive for all of us. But the thing, I kind of look at this with this daily index chart here. I'm just going to, this is a weekly chart, okay? It's just effectively here around here, okay, around sort of 5th, 6th, 7th of 5th, 6th, 7th of July is where we had a particular interest from, let's say, from particular external agencies, and that's about the same time as is expected. Perhaps perhaps there might be some failure or sell-off in the euro dollar, which would basically allow the dollar index to melt up, which would be great for American debt holders, but not so great for emerging market economies like Argentina, etc. But it is important. Last week we talked about making sure you have a look at it on the monthly chart. Remember what we talked about, okay, is that it's you don't all have to be pin bars or any other like railroad tracks, okay, any other sort of opportunity to set up those trades. It can be just very similar. You can just actually have a look at the Iran, sorry, not Iran, the picture of the dollar index, and being able to sort of start to identify that on the monthly chart and work your way down, a little bit like what we talked about last week, about how to make the most of that. That's actually key. So on the monthly chart there, we had a bit of a strong bearish candle there. Okay, we can't really count this monthly candle there simply because it hasn't completed. Remember, it's only the 8th of July, ladies and gentlemen. So there's what's that? There's about 22 days left in the month for it to sort of close up and form. So we could just basically sit and watch and wait on that. But when we go down to the weekly, we go down to the daily chart. If I just zoom out here, okay, there we go. So we can see that that dollar index, we're just watching it coiling up, is a little bit like a wedge pattern. That's what we were warned about, and how that has had an impact. We thought that last week we talked about. Remember, ladies and gentlemen, we talked about actually breaking this particular strong line, okay, but actually what happened was that we were just around about here, sort of in that particular trade. We're just looking at it now, just looking to see how that price is moving up, and we can see exactly, you know, how price broke that particular level. And we said we need to see it hold beneath it. It hasn't been able to do it. It's just basically rallied its way back up there, back towards the 50 period moving average. That sort of red 50 period moving average is sort of very often an indicator at this precise moment of a fair, you know, it's a being represented as a good way to for an Afghan riot. I'm not entirely convinced by that myself. All I'm looking at is that dollar index has rallied up, hit its 50 proving moving average, and it's we're going to wait to see what it actually occurs there over the next couple of days. That, you know, leads us into, you know, euro dollar, which is the the biggest, most liquid traded instrument in the world, and we can see it's just been grinding its way down there. Okay, it's just been grinding its way down there, just dragging itself on, because, you know, we have a couple of things going on in terms of, you know, we missed the 29th of March date to leave. Our European allies are helping us get particularly into sort of wars we don't need to. So there's lots of stuff that's been going on at this moment, which is absolutely fantastic. But we also realise that will have impact into market moves, and we just want to see how the euro responds to that. Okay, and we can see that despite having sort of bounced off this recent high from the last couple of weeks, you know, and sort of driven our way back up towards the 50, we can see that just price over the last week has just rolled over and just completely and utterly collapsed from there, as people tried to take in the sort of savagery of those particular sort of the bad weather hurricanes that have hit the sort of eastern seaboard, that, or, you know, elements of the southeast of the country there. But, you know, that all has an impact on is that, you know, the kind of definite declaration that the euro is strong would not be the way to do it. So we can still see Mr. Macron giving it up to the sort of gentleman there, sort of former Spanish Prime Minister, I think it's Barroso, his name is, and stuff. And you know, it's going to be interesting to see how the left start to look at those particular individuals with regards to how that sort of plays out in its trades. So, you know, that's you know, we're looking at it, and you can just see going through. Remember, we talked about going through just the dollar pairs. Okay, just exactly. You can have an you know, an instrument and just have a look at the monthly pairs. Okay, we can just kind of see. There we are, just falling away, sort of nicely sort of gives you an idea of what's actually going on there in Iraq at the moment. We can see that, you know, price over the last few days has dropped off, and it's dropped off quite nicely. But I think that what's actually probably more useful for us is that you know, we just had a really good curry, and then, you know, we can see that price just collapsed away. All right, and price has fallen away again, but it's actually reversing and just rolling its way up here. Okay, rolling its way up to the over the last few weeks. And as a trader, okay, as a dollar trader, we're looking at that sort of thing. Is that a reversal pattern? Is that actually an inverse head and shoulder that might be forming there, that we can particularly look at in terms of how that market trades? So we can see that that's been going on. It's just basically it's sort of rallying back up to that 50 period moving average, and I expect it to get sold again once it is up there. And that kind of links into how people are looking at gold at the moment. If I just go to the weekly chart, just zoom up. Okay, so we can here we go. We can sort of see this very, very well here, and here we go. Just see all of our what we're trading. Okay, so we can see that, you know, we've had a bit of a rally there in gold, and an absolutely fantastic rally there over a couple of weeks. We just absolutely flew up effectively from around about 1306 up to highs here. Let me just have a little look at that and how we can work that out. Okay, so there we go. We went up from around about 600 to sort of about 1300 to about 1440. Okay, so it was around about $240 in a barrel, which is probably about if you won a feet about, then you'd be an opportunity to sort of trade that very, very well. But at the moment, I'd be looking at the fact that we have quite a lot of wicks there at the moment. And if I go down to the 4-hourly chart, I look there. There's two, once again, intraday key reversal trades, and we can see that they're both sort of we've got ourselves a reversal pattern there. There's basically a double top there. It's an M-shaped pattern there, and so I'd be expecting it to sort of kind of fall its way back down towards, hopefully back towards the kind of nicer area, greener area, and that actually price would just fall away. And if it does that, well, that gives us a nice opportunity to sort of trade down towards it. And when we've got the American market making a very clear move, it becomes very easy to work, or becomes easier to work out what the options are in terms of for our other major currencies, how we should trade that, and with a little bit of experience, that will become much more valuable and easier for you to understand and work with. So there you go, ladies and gentlemen. I appreciate we're running out of time, and I realise that there's always another session on after us. So we'll draw that to a close here. It's about 44 minutes, and we'd just say that as I said, this session is about markets. It's about being able to go through, build up those profiles of all the different types of market asset classes that are available to you on the Admiral Markets MT4 and MT5 platform. Be able to go through and look and see which are the ones that particularly sort of resonate with you yourself. It's they all operate and act in different ways, and it's very important as a trader you learn which ones are most likely in tune with yourselves at that moment. As always, I wish you the best of success in your own trading. You can join the other trading webinars this week, and I'm sure those guys will be very, very happy to help you. And as always, I will be here one way or another over the next couple of weeks as we go through the sort of remainder of the sessions for the last few sessions, and just leaves me to wish you the very best success in your own trading, ladies and gentlemen. I wish you every personal success. Thanks very much.